Hi, CMattDye here. Hope you're having an awesome day. And today I wanted to bring to you one of my top projects, the top 3 projects from my projecting, is Liqwid Finance. Now, I really do like Liqwid Finance. I'm going to talk to you about one of the buzz around it and then some nerdy things, and then I'm going to talk about price afterwards. So Liqwid defines itself as an open source DeFi protocol on the Cardano blockchain that creates liquidity using algorithms to set the interest rates calculated by the lender and borrower supply of the asset. And you can do different assets on this. I'm going to talk about the example on their website, break it down a little bit. One of the real buzz around this is Forex yield streams. People hear Forex yield and they go crazy, and rightly they should, because it's fantastic. So of the 4, you stake your ADA. And ADA staking, you get a 5% yield. Well, as you stake your ADA, you're also lending it out. When you lend it out, you get an interest for that. But when you lend it out, they give you QADA. You also get that yield. So the amount of time that you hold the QADA for is the amount of interest that you're going to get. Well, with that QADA, you also stake it. And that's going to yield you LQ tokens. Well, as you get those LQ tokens, you can then stake the LQ tokens, and you're going to get a percentage of borrower interest that's repaid. That's basically a percentage of the platform, because that's what the platform is based around, lending. So that's a pretty neat thing. And this example covers ADA. So that's something I want to point out. They are probably going to have other tokens that you can do this with besides just ADA. So that could be pretty interesting. Actually, they are going to have other tokens. I just don't know what they are. If we look at the roadmap, they've already done a lot. So Q1, they're going to release their mainnet pretty soon. LQ Fair token launch. They're going to do secondary product offerings in Q2. Liqwid USD mainnet integration. So that is their stablecoin. I'm assuming. I haven't heard anyone talk about that yet. And this is their white paper. I'm going to talk about a couple brief topics, and then you can read it if you want to know more. So Liqwid distribution, 60% is going to be user distribution, 10% to farming, yield farming, 5% to the DAO treasury, and 25% to the core team, which vests in 146 epochs, which is 730 days, which is a little bit over 2 years. As you can see here, the amount of LQ tokens is going to be 21 million. That's the amount they're going to have. They're not going to have any more. Every epoch, the amount of LQ tokens released is going to be 35,958.904. or 0.68% of the total supply. So that is that. If we go through the white paper, I'm going to pick out little bits and pieces. As we scroll down, the Liqwid protocol, I already talked about it, what it is. You're going to have collateral requirements for what you're doing. Every market has a minimum collateral ration requirement. And the scaling is going to be from 0 to 1, and that's going to determine the percentage of the underlying token value that can actually be borrowed. Low market cap assets have lower collateral factors to mitigate risks stemming from illiquidity and volatility. High market cap assets will have a higher collateral factor. So basically, your lower market cap assets, which is your like altcoins, people call them, you're going to have, it's going to be easier to borrow those, because you have risks like illiquidity and stuff like that. Your higher assets are going to cost more to borrow. Like ADA is a stable asset, just use that as an example. The total value of a user's underlying token balances will be multiplied by that collateral factor, and that's going to equal your borrowing capacity. So let's say you want to borrow MELD, for example, just to pull them out of the air. and let's say you want to borrow 1,000 meld, then your scaling is, let's say it's 0.8. Well, you 0.8 multiplied by 1,000, that's how much you can borrow. So that's kind of neat. They also have risks and liquidation. So it's not, they're not going to, if you pass your collateral, they're not just going to liquidate you immediately. You know, Ethereum would probably do that. Parts, you know, certain things on an Ethereum network. So liquidation required the outstanding loan to be repaid at the spot price minus a liquidation penalty. But Liqwid uses an internal mechanism to pool insolvent loans. So they basically have some technology to pool insolvent loans together to help automate the liquidation process. But they allow arbitragers. Arbitrager is someone who, let's say, buys Sunday token on MuleSwap and sells it on SundaeSwap and makes a little bit. That would be an arbitrager if you're not familiar with that term. They allow arbitragers to repay part or all of the loan over the borrower's limit in exchange for a portion of the borrowing user's collateral at a discount. So I think that's really kind of neat. So they've really thought about it, you know, how could it work from a user standpoint? How could it work from someone who's real technical? They just want to do arbitrage. Like, how could that work? So it's really fascinating. I'm really excited to see how this is actually going to work. If I scroll down a little bit, interest rate curves. So the Liqwid protocol uses an interest rate model to create an interest rate curve in the market based on supply and demand. And that interest rate curve is going to change with market dynamics. So you've probably heard the term liquidity crunch. For example, if you've traded anything at all, the stock market, you've heard of a short squeeze. Well, too many people were short, not enough people were long, and it just causes a liquidity crunch and a short squeeze happens. Something like that. So they've thought about that. Here's the equation right here if you care. I'm going to let you read it yourself because a lot of nerdy stuff. I don't know if you really want to hear all this, but I'm going to link this in the description if you want to read it yourself. I think it's very, very interesting. That 4x yield is something I'm very interested in. And I want to talk about price a little bit here. Okay, so if we look at price of Liqwid right now, it's at 105 ADA, which is quite high. So when it came out on MuleSwap, it was around 16, I want to say, and it went up to 20 and hovered around there a little bit. Then it started to take off, hovered around 50, 60, 70, and now it's taken off to over 100. Well, at 100 ADA, at a 21 million token supply, you're talking about a $2.1 billion valuation, or $2.1 billion market cap. That's quite high because, well, not all 21 million have been actually supplied yet. So let's talk about it in those terms. Okay, so if we look at it, 365,000 LQ supply gives us a $38.325 million market cap, which isn't really that much. But when the protocol actually does launch, we want to be aware of where things can actually go. So let's look at this. This shows us the tokenomics right here. So this is approximately 10 years, there'll be 10 million tokens available. 35 years, there's supposed to be 21 million. So that gives us something to work with. So in about 5 years, there's going to be about 5 million tokens on the market. So what does that mean? Well, if there's, let me pull up a calculator here. So if there's 5 million tokens in 5 years, 5 million tokens, and we can look at, well, 5 million tokens, what are we looking at? So let's say at $500, 500 ADA, a $5 million, 5 million tokens, I don't know why it's a tongue twister, 5 million tokens at 500 ADA gives us a $2.5 billion market cap. I think that's very doable. So I'm thinking the platform comes out, if this is what they say it's going to be, 500 ADA should be very doable. Now, there's a lot of things that have to happen. The app hasn't launched yet. However, the team is on top of their game. I'm in their Discord. It's active. They're, telling people what's going on. This is their Twitter here if you want to check that out. I'll leave that in the description. I'll leave their white paper in the description. But right now at 100, some people think, well, 100 is overpriced. Well, not really if you can get 4x yield. So if you can get a 4x yield, which I have every faith in the team to do, in 5 years there's 5 million tokens, at 500 ADA, that's very possible. So that's kind of what I'm thinking. That's what I'm looking at. I wanted to get the video out just to show you guys, I like this. Go do your own research. Go look at it, join their Discord, look at their white paper, talk to the team. If you like it, this could be something that can really be a strong part of your portfolio. So if you like the video, throw a like. If you don't, throw a dislike. I do appreciate the feedback. With that, I'll see you around the crypto markets. Have a wonderful day.